Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, January 28th, and we are again in the final hour of the trading day. I mention this each day, but I prefer to make the majority of my buying and selling decisions at the close of the market, right before the market closes. And the reason this is my preference is because during the day, you have the algorithms, you have a lot of day traders, they're battling it out. I consider those prices noise and not really valid prices. At the end of the day, you have the large financial institutions come into the market with size, and they take over the price. They take over moving the price from the day traders and the algorithms during the normal part of the day, and they take over the price and start moving the price at the end of the day. They're the most well equipped, they have the best information, they have the best technology. And so when they start to move the market at the end of the day, I want to base my buying and selling decisions on those prices, on those closing prices, compared to just the intraday noise prices. So anyway, I hope everyone is doing well today. Thank you so much for coming by. It's always nice to see everyone. I appreciate you spending your time here, investing your time, and I hope it's helpful and beneficial to you. And I hope I hope that it's increasing your trading knowledge and your investing knowledge. So, hey Evan, good to see you. Always great to see Evan. Thanks for coming by, my friend. Can you hear me is here. How you doing? I can hear you, or I can read your chat, that's for sure. How you doing? Good to see you. All right, well, what a day. Holy hamburgers. Yesterday the world was ending, and today we're up like nothing happened. So, hey JT, good to see you. Nice to see you, and thank you for coming by, sir. It's always great to have you here. So the Dow is up 250 points, roughly, up 0.87. The Nasdaq is up 142. It's up 1.5%, and the S&P is up 38.77. Up 1.19%. So big reversal day after yesterday's big plunge day. So a lot of volatility going on here. We do have Apple's earnings at the end of the day, the mighty Apple. So this definitely, those earnings reports definitely could impact the market. Apple is up $9.29 today. I think it was down $10 yesterday. So it's like it almost never yesterday never happened. So for some reason, the market collectively has decided that maybe it is not so concerned with the coronavirus as it was yesterday. But who knows? Who really knows what's going on? But all we can do is follow the prices, make our buying and selling decisions from that. Hey, Mount Doji, nice to see you, my friend. Appreciate you coming by. Hope you're doing well. So listen, here is the plan for today. First of all, we're going to go ahead and run the U.S. legal disclaimer. We're going to come back. We're going to take a look at my two positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward. After that, we're going to do a few minutes on trader psychology. I mention this each day, but the discipline you have in following your trading plan, in my opinion, is more important than the trading plan itself. If you find yourself creating a trading plan but not being able to follow it, you really need to work on that. Consider it a skill. Consider it a skill that you have to do some work on, because you can have the best trading plan in the world, you can know everything about charts, but if you don't have the discipline to follow your plan, you're most likely going to fail. Just being honest with you. So one of the best ways I found to stick with the trading plan and stick with following my trading plan is to position size conservatively. That way, any move up or down doesn't affect me too much emotionally, amplify the emotions, and make me want to break my trading plan. So we're going to talk a little bit about trader psychology. After that, we're going to go down through each stock in my watch list. I look for three things for me to make a trade. First is I need to see a combination or a confluence of indicators lining up at the same time. I look at each indicator as a potential group of buyers, and you dramatically increase the probabilities of having a profitable trade if you can find a combination or a correlation of indicators coming together. So like I said, to put yourself in a better position to make money in the market or have a profitable trade, you need to be in with a lot of groups of buyers. So if you can find 1, 2, 3, or 4 different indicators lining up at the same time, at the same day, at the same price, I look at that as 4 groups of buyers. And like I said, the more buyers, the better the chance you have. It really dramatically increases your chances of having a profitable trade. So I'm going to look for a combination, confluence of indicators lining up. Step 2, I want to make sure I have a good risk to reward ratio. Sometimes you can have really good setups, really good confluence of indicators, but if they're overstretched, if they're overbought, if they're overextended based upon what your filters are, mine are the RSI and the ATR channels, then even though I have a confluence there, it doesn't give me a good risk to reward ratio. So I want to make sure that I have at least minimum a 2-to-1 risk to reward ratio. So if I'm going to be losing $100 on a trade, I want to be able to make sure that I have a good chance of making $200 based upon the resistance above me, based upon the support below me. So that's step 2, requirement 2. And then number 3, have to make sure I do not have too many correlated positions. I don't want to go in and buy Apple and Amazon and Google and AMD all on the same day, right? If the market goes up, great, I'm going to do really well. But if the market goes down, then it's like instead of having one tech position, I have 4 positions. So I suggest having some diversity in your holdings. Maybe have some autos, maybe have some tech, maybe have some healthcare, maybe have some, tobacco. And then ideally, if you can, try to go outside of equities and look for a position in gold or silver or oil or bonds, something like that, to really diversify your holdings. So that's it. Step 1, combination, confluence of indicators / groups of buyers. Number 2, make sure you have a good risk to reward ratio. And then number 3, make sure that you are not too heavily correlated in any one particular industry. So I'm going to go down through the watch list, I'm going to take a look at that. If I can find something at the end of the day that meets the criteria, I'll go ahead and place the order. Then after the market closes, if you have any questions for me, please let me know. I'm happy to answer them, happy to clarify anything I discussed today. If before the market closes you find a symbol that you think is a good setup and you think it would be helpful for the group to take a look at, please let me know. Maybe put a star by it so that I know that it's time sensitive, and I'll do my very best to get to it before the close of the market. So that's the plan for today. Not too bad, right? Okay, so hang tight. I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All righty. All right. Hey, Zach is here. Zach1662. Good to see you, my friend. Thank you for coming by. Let me know if you have any questions. Hi, Joe. Good to see you. I think we have a trade on for Joe still, right? Yeah, we do, on GILD, if you still have it. I hope you do. Hey, Steve. Good to see you, my friend. Always an honor, always a privilege to have you here. I'm always excited to have you here. I know everyone else is. I mean, it's a pretty cool thing to be in a chat with the Steve Burns. So thank you for coming, my friend. Steve says, hey, Greg, what sharp reversal today? My square trade working out so far. I saw that earlier. Let's take a look at that. And yes, what a huge reversal. Unbelievable. Look at Steve's trade here. Up 4.76% today. He bought it on this little pullback. On my chart, it didn't bounce off the 200, but regardless, V1, right? V1s are always better than no V1s. Look at this beautiful trade today. Congratulations. It's gone parabolic above 70 RSI. Fantastic, my friend. Congratulations. Roman Ray says, hello from LA. Hey, Roman. Good to see you. My old hometown. That's where I was born. So thank you for coming. If there's anything I can help you with, let me know. Hey, Kamal. Good to see you. Hey, Greg. Disney looks like it's setting up. Yes, it does. under the 200, over the 200, under the 30, over the 30, under the third ATR channel, over the third ATR channel. 100% agree. Kamal and I had a really good session last night. We did a lot of double bottoms divergences in our lesson last night. So always good to work with new students, and Kamal is a great student, very, very sharp. And thanks for pointing that out, and we'll definitely be looking at Kamal when I go down through the watch list. Gamer Squad, hey buddy, good to see you. That's David from Denver. Thanks for coming by. Mount Doji says, thought the same on Disney as well, Kamal Shah. Yes, it's one of my favorites today. Murat, hey buddy, what's going on? Good to see you. So do you recall the other day that JT recommended the website longshortgame.com where you can do some simulated trading? So I looked at it. I went and played with it. It's kind of fun. It doesn't have the indicators that all the indicators that I look at and so forth, but I believe that Murat turned $10,000 into 51 million. And he said, what did he say? Oh boy, where did it go? He says, Greg, I think I cracked the code. I will continue playing this once I feel fully confident. I am planning to trade all my equity positions using this approach. Look at the new number. So that sounds interesting. 10,000 to 51 million, not too bad. So keep us up to date on that, Murat. And I am definitely interested in what you've discovered for sure. So congratulations on the great score. Okay, where am I? Frank, hey buddy, good to see you. Frank says, be careful when the market's on fire. Man, it's hard to stay cool as voices shout fool. But great traders are strong and mighty as the oak, for they know not to trade when they smell smoke. Ah, so good, Frank. Frank has some such great poems. I mean, I couldn't write a poem, I think, if my life depended on it. And Frank can just spit these out like no problem. So that's great. And if it's okay with you, I'd like to post that on my Twitter, Frank. But be careful when the market's on fire. Man, it's hard to stay cool as voices shout fool, but great traders are strong and mighty as the oak, for they know not to trade when they smell smoke. So good. Joe says, yep, still holding GILD. Gonna get out day before earnings. Perfect. Steve says, another great one, Frank. They're all great, huh? Frank says, thank you. Marco, hey, Marco. Nice to see you, my friend. Thank you so much for coming. If there's anything I can help you with, Marco, you let me know. JT says, Murat is buying dinner for everyone. Absolutely he is. Murat says, no problem. All right, well, let's get to it and see what's happening. I mean, I'm just blown away by the reversal today. Just blown away. Hey, by the way, I want to take a little poll. You have to answer with two questions. Apple earnings going to be up today? That's the first question, yes or no. And second question, what will the stock do on those earnings? Remember, just because a stock beats earnings does not mean the stock's going to go up after hours. It may already be priced in. That's the problem with gambling on earnings. So is Apple's going to beat earnings today? Yes or no? And is Apple going to go up on that news, or is it going to go down? Like, I can't believe that they wouldn't beat earnings. I don't know. I mean, I have no basis of reference to even say that. My only unofficial study that I do is at the gym, and I look at how many people are wearing earbuds from Apple, and with my scientific calculation, my numbers come out to be about 15%. 15% of people have Apple AirPods. So anyway, not too scientific, but anyway, I'd like to hear your thoughts and your guesses. It's fun to guess on earnings, but it's not such a good idea to bet on them. Gamer says, yes, Apple is going to beat and stock go up. Okay, you are on record, David. Ooh, Glenn, earnings up, stock down. All right, well, okay, we have two sides of the camp. Kamal says, beat and flat. Interesting. See, here's three different people. They have three different opinions. That's what makes a market. Hey, Andrea, good to see you. Thanks for coming by. Great trade there on SQ, Steve. I'm trying to make it through your moving averages book. Very clear and concise. It's a great book. Moving Averages 101, my favorite trading book ever. So I'm really glad to hear you're reading that. Okay, let's get to it. So, only have two positions. You know, yesterday didn't really offer me any good setups. The good news is I missed out on the big, huge move yesterday. The bad news is I didn't get much to the upside today. I did. I did. But, you know, if you average the 2 days, not too bad. But Merck. So Merck went under the 100-day moving average yesterday, back over. It went under the 30, back over. It formed a V1. Here's day one. Here's day two. Day two washes out day one, closes above day one's close. Normally, I don't take a V1 up against a large bar like this, but this is a different approach. This is an under the 30, over the 30, under the 100, over the 100, and you throw in the V1 for good measure, kind of a cherry on top. Did hit one profit target today, right near the top at 1867. So up slightly. Glad that I took some off at the higher level here. My stop here is going to be basically a close below the 30 RSI. Well, essentially, basically it closed below the halfway of the washout bar. I could use a close under 30. I could use a close under the 100. I'm going to kind of split the difference there. On V1s, you shouldn't close lower than the halfway of this bar. So going forward, that will be my stop right there. But hopefully it doesn't get down there. I don't know. We'll see. If it continues to move up, I'll continue to scale out. 50 RSI and the 50-day moving average is my initial profit target, giving me a good risk to reward ratio if it moves my way. If I'm wrong, you know, it gives me a smallish type of loss to the downside. I mean, it could just crater, of course, but you know, I have things to protect me there, like an emergency stop. So anyway, glad I at least did hit one profit target. Glad it is up a little bit today. Evan says, I'm saying up and up. Can't bet against them. That's true, Evan. Good point. Steve says, my wild guess for fun is that Apple's great earnings is already priced in and it will result in profit taking regardless of the result. Down on price, no trade, but I would buy a big dip. Ah, interesting, Steve. Thank you. Thank you. Thank you. Boy, where do I stand on this? I think they're going to beat. I'm going to say they're going to beat and go up slightly. But again, right? We have 5-6 people with 5 different opinions. That's what makes the market. Thanks for that, Steve. Merritt says, it took me 1 hour to get from 1 million to 51 million. Oh, you only made 50 million in an hour? Just ask for a raise. I think from 1 million to 10 million, I had to take 20 positions with 5 losses, 30 pass. Oh yeah, you can pass from 10 million to 50 million. 15 trades, 2 losses only. Excellent. Merritt says, I took notes along the way. I'm going to start over tomorrow again, see if I can make it again. Good. Andrea says, Merritt, I wish you would live stream yourself while you do it. Yeah, that'd be fun. Andrea says, the long short game, that is. Oh, right. Frank says, that's a stock I own and never trade. Well, you've done really well, Frank. Nice going. Okay, so we just talked about Merck. What else do I have? Oh, all-time famous overnight SPY trade. So in case we have some new viewers today, do you want to go over this quickly? I do buy the SPY every day at the close of the market. I sell it first thing the next morning. It has nothing to do with technicals. It has everything to do with the results of this long-term back-tested study by Liz Ann Saunders at Bespoke Invest. In this study, they tested 2 approaches. The first approach is buying the SPY in the morning at the open, selling it at the close every day. So buy the open, sell the close, buy the open, sell the close. If you would have used this approach every day since 1993, you'd have returned a negative 13.9% return for all your triples. However, if you did the opposite, which is what I do, and buy the SPY at the close each day instead of the open, so buy the close, sell first thing the next morning, you'd have returned 634.2% return. So you can see between the 2 options, the buying the SPY at the close, selling the next morning, definitely is the superior method. Past performance is no guarantee of future results. We know that. But I would rather allocate capital to something that does backtest well compared to something that doesn't backtest at all. Here's the chart. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see there's a clear difference. It shows you if you have an edge and you can rinse and repeat that edge every single day over the long run, it can really have a nice profit. Doesn't mean it goes straight up. There's ups and downs. This is true with any trading approach, regardless of how good of an edge you have. You're always going to have ups and downs. They're to be expected, so get used to them. But my best advice is if you have an edge, it's going to take a while for that edge to play out. So make sure you position size correctly so that if you run into a bad patch, it doesn't wipe you out, right? So I use a 10% position size on my overnight SPY trades. So with that being said, I did buy SPY yesterday. It was really scary down here at 323.50. Sold it today at 325.06. So nice little up move overnight. Glad to have that. Got pounded yesterday. This was probably my largest overnight loss, and I've been using this just shy of a year now. But my results for the year, this year, have been down. But if you look at, the last 360 days or so, or a little less than that, definitely up, and definitely very happy with this approach. So anyway, I will be buying this again at the end of the day. This is just something I do every single day. So I will be buying this again at the end of the day. So anyway, two trades to do, two trades today, two profitable trades. Didn't get a huge move on anything today, but again, yesterday I missed out on a lot of this carnage, so it's kind of a wash all in all, right? So all right, well, that's all I have. That's all I have. Steve says you've done very well, Frank. Murat says, I actually made money using the same approach today using 30-minute charts. Oh, interesting. I'm excited, Murat, to hear you talk or tell me about this. It was on oil. Frank says, FWIW. I saw a photo of Tim Cook looking real happy and flashing a victory sign. Oh. What does FWIW mean? Christopher says, hello from New York. Hello, sir. Welcome to our country. I hope you have a good time here. I hope everyone's nice to you in New York. Anyway, I'm sure they're nice there as well. Good to see you, Chris. I hope you're having a good trip. Murat says, Andrea, once I am sure that it was not by luck, then we can do the live stream. Perfect. Mount Doji says, I am at a PTON eyeing ABR. So PTON, okay, so Mount Doji bought that yesterday, 31.12, got out either with a little profit or a little loss, or even, I'm not sure when he got out, but that's good, right? It wasn't going your way. You got out. Love to see that, Mount Doji. That's the key to profitable trading. When something's not working, get out of it. ABR. Let's take a look at ABR here. Yeah, nice. It's a nice V2, but unfortunately, I always feel like I'm a killjoy for Mount Doji. Day one's bar is larger than 1 ATR. So that precludes me from taking the trade. It is a nice V2 other than that, but it's triggering the V2 up here above the 1 ATR channel, which is just too high for me. I know I'm a killjoy, right? But anyway, let me know if you end up doing anything with that, Mount Doji. Yeah, they are all nice. Good. Lots of people in mask. Oh, really? Interesting. Glenn says, gold is looking like a cup and handle chart pattern. Just bought it above 147. Yeah, you bought it at 147.02. Down today, closing that gap a little bit, but, kind of to be expected with the big move down. Or the big move up in equities. Hey, let's go on to some of your trades that you shared with me. This is Joe Turner. Joe's had a really nice trade here. He bought this GILD back on the 21st of January, bounced off that third ATR channel, and it has moved nicely, up 1.25% today. So it's above the 50 RSI, it's above the 200-day moving average. So that's excellent, Joe. Keep me informed on what you're going to do with this trade, and watch that 200-day. All right, so Glenn, we talked about Glenn. Glenn's had a, definitely this is still a profitable trade on gold. Bought it here at 47.02, moved up nicely since he bought it, moved up nicely yesterday. V2 to the downside, day 1, day 2, day 3, day 2, washes out day 1 to the upside, closes below day 1 here, making it a V2 to the downside, and a rejection of this previous high here, and a double top. Kamal, if you're watching, double top. This top has big strong bars. We came back, we painted some red MACD bars, then we went higher with very low MACD bars. So this is a double top with the bearish divergence and a false breakout to the upside, because yesterday went up to a new range. Now it's back in its old range. Andrea, okay, so kind of similar with gold. Bonds are down today. We did have that big gap. Looks like we're going to close below the low of that gap, which is a little bit of a definitely a bearish signal. We got right up here to the 6 ATR channel. It is difficult to get things higher than the 6 ATR channel. It is, but she bought this like at 114. It's at 143. So let me know if there's any change in that, Andrea. All right, look at this, everybody. I'm so proud of Jesse. Jesse is a former student of mine, and you're probably familiar with him in the chat. Look at this beauty that he bought. Return to value into the value zone with the V1. He bought this back on the 24th of January at 80.70. Look at this monster run. Look at this monster run. He's up about 12.82% on this trade in 2 days. So really happy for Jesse. Like I said, he's a former student of mine, great student. I think this is probably his largest trade since I've known him. So congratulations, Jess. Really great to see that. And then PTON. Okay, Mount Doji got to add a PTON, so we can take that off the board. Okie dokie, Smokey. Just need to make sure. Yes. Okay. All right. All right, everybody. So listen, this is the time of the day where I do like to talk about trader psychology. There's some really good Facebook, Twitter accounts out there that post every day with really good trading words of wisdom, like seriously good stuff to read. And if you read it and internalize, it's really going to help. And you're just like saying, Greg, I just see a picture of Scooby-Doo cartoon up there. And if you're old enough to remember Scooby-Doo, they would go out at the end of the show. They would always unmask the guy that was giving him problems during the day. Now to find out who's been sabotaging your trading, oh wait, it's me. It's you that are sabotaging your trading, right? So this is just kind of a prelude into this great post by Julian Kamar at blog Julian Kamar on Twitter. Really great Twitter channel. I would suggest that you go to it, subscribe to it. But it is the trader that destroys his own edge. You violate your own rules. You let losses run. You are impatient. You listen to tips. You take profits too soon. You increase the risk, right? It's you that are sabotaging your trading. It's not the market. It's not the market makers. It is you. You have to take responsibility. And this all gets back to me talking about creating a plan and following a plan. It's not your friends that are messing up your trading, everybody. You have to take a hard look at yourself. Are you violating your own rules? I don't usually violate my own rules, but a lot of people do. You let losses run. I do not let losses run. You are impatient. I try not to be, but sometimes it pokes its head up. You listen to tips. I never listen to tips. You take profits too soon. Okay, maybe if I'm guilty of a little something, it's in this one. Maybe I have to work on this a little bit. You increase risk. I definitely do not increase risk. The key is to work on your mindset. This will help you do your trading well. And that's why I like to talk about this every day. It's your mindset. It's your psychology. It's your discipline. It's following your plan. It's whatever you want to call it, right? But it all comes down to you. That's why most traders fail, everybody, is because they violate or have issues with this. And so at the end of the day, take the cap off, look in the mirror. Now to find out who's been sabotaging your trading, yes, it is yourself. So, you're the only person that can work on that, but stick to your rules, right? Please stick to your rules. And thank you, Julian, for this great post. And again, it's at blog Julian Komar on Twitter, I would really suggest. But thanks for that great post to let me do a few minutes on. Okay. All right, here comes the Scooby-Doo over here. Okay. Mount Doji says, "You're never a killjoy. I look forward to objection." Okay, good. Sorry, man. I always feel like I'm picking on Mount Doji, but you know what I'm looking for. Listen, that's just my rules, Mount Doji. I mean, that's just what I have found in my past and in my experience. It works, right? It's not the holy grail. It's not the only way to approach things, but I'm here to teach you what I learned and what I know works. Steve says most index ETF bounce near the 50-day moving average. This is bullish so far. Yes, it is. Evan says I am eyeing DOCU and TTD. DOCU. Yeah, that's one heck of a V2. We were above the value zone, we came into the value zone, we moved sideways here, we went up here a little bit, down here, washed out this previous low, day 1, day 2, day 3. Day 2 washes out day 1. Day 3 looks like it's going to close above day 1, giving it a V2, also above the 70 RSI, also above the 5, the 10, and the 20, which is nice. Really, the only better thing that could happen is that we would have a MACD crossover, but this is fantastic. This is fantastic, Evan. Let me know if you do anything with that, okay? Let's look at the weekly on this. All right, weekly, monthly is definitely up. Weekly is into the value zone, was into the value zone. It's a little high for me to buy, but okay. I probably shouldn't say that. But it's okay. It's not like up here at the third ATR channel and on the weekly. And yeah, this looks good. Stop would be, for me at least, close below halfway the washout bar. TTD. So Kamal above the 1 ATR channel into the value zone. We bounced here, made a lower high. If we make a lower high, we have to wash out that previous low. Well, we did that. Here's a V2. Day 1, day 2, day 3. Day 2 washes out day 1, day 3. Looks like it's going to close above day 1. So, no gap here. This looks fine. Let's look at the weekly. A little high for me on the weekly up here at the second ATR channel, but that's just my preference. So, Evan, if you take that today or DOCU or anything else, let me know. Andrew says, I'm still in TLT. Yep, I thought you might be. You're letting your profit run, so that's excellent. All right, well, let's get to it. Apple. I have a friend that owns a lot of Apple, and I talked to him yesterday. He was really down. He actually sold some calls on Apple ahead of earnings. So it's weird when you have covered calls because you're never quite sure if you want the stock to go up or down, right? Because your calls are above you. You actually want it to go up, but expire 1 penny under what your strike price was. So not quite a V2 here, a massive gap. Filled the gap. Gaps get filled a lot, but today's going to be a big move. I'm pretty sure, one way or the other. Who knows? It might be flat, but almost like yesterday didn't exist, right? So it's going to be exciting. And the person that called the correct move gets a prize. I'm not sure what the prize is, but we'll have to figure it out what it is. Maybe a specialized poem from Frank. That'd be cool. So nothing on Apple today for me. Earnings. Adobe, big move down, bounced right at the 20, back up. Can't get involved here, unfortunately. Need to pull back into value. Amazon. Oh, Amazon. All right, so listen, this is a tough one for me, everybody, because the close under the 200 and back over the 200, it is a good back tested approach. But I have two things going here. I have earnings, which is not the biggest thing, but this large bar, larger than 1 ATR, very likely, in my opinion, doesn't mean it's going to be, but in my experience, a big down bar like this is going to have some resistance at the halfway point, the 50% Fibonacci point. So if I go from here up to here, that gain compared to here below the 200 really doesn't offer me that great of a risk to reward ratio. Now you could trade this just mechanically, just hold this thing above the 200 and maybe it's going to go rocketing up for you, but that's just not really my approach. So, and then we have earnings in a couple days anyway, but right here, I am going to pass on Amazon. Doesn't mean it's going to go down. Just from my analysis, with this previous range here, we're probably going to bump up into that. Who knows? And if Apple misses on earnings, I'm sure it's going to affect Amazon. If they beat on earnings and it goes up, I'm sure it's going to help Amazon. So, I'm torn, and because I'm torn, I don't want to be torn when I take a trade, so I am going to just pass on Amazon. But this is a legitimate entry under the 200, over the 200. I just don't like the risk to reward based upon the halfway of that Fibonacci point. I could be totally wrong, but I tell you, I've been doing this so long. If I'm wrong, I really don't care. Right? I made my best decision at the time. So if any of you take Amazon, let me know. Boeing. I should say, Amazon also is at a 50.04, so it definitely has the potential to close under 50. And if I was torn at all about taking this, if it closed under the 50 RSI, I would definitely not take it because it already rejected the 50. It hasn't done it yet, but I'm just saying if it does. But all in all, I'm just going to let Amazon go. But if any of you take Amazon, I hope you do really well with it. Boeing, down today, nothing there. Berkshire, a little bit of a rally, not quite as much. It went under the 50, over the 50, it's a good dip by area. I mean, just from a risk to reward ratio, if you bought at the end of the day, you could just get out with any close under the 50 day, but it's just not enough for me. So I'm going to pass on Berkshire. Beyond Meat, kind of range bound here, down today. Steve had a beautiful trade here when the 5 EMA crossed over the 20. He had a 38% move on this. So Steve's had some fantastic trades this year, Steve. Congratulations, buddy. You are the master. But for me to get involved in Beyond Meat, I'd have to have a pullback into value. Caterpillar, up a little today. It went under 30, over 30, but that's not enough for me. If it closed back over the 100, maybe, but I'll mark that just in case it does. But Dow Jones, I mean, now we close below the 1 ATR channel. Now we're coming back into the value zone. I'm looking now. Kamal and I talked about this a lot last night, but I'm looking, it might go up another day or two. Then I'm looking for a little bit of a pullback, look for a higher low V1. The people that bought down here, they are looking for a reason to sell. I promise you, anytime you buy a deep dip like this, anytime you make a lower low, the people that were fortunate enough to buy down there are most likely going to look to lock in profits if you have any weakness like a rejection of the 50 or a close below the previous day's low. I would much rather, just like on Caterpillar, on Dow Jones, yes, for it to come down, make a higher low V1 or V2 in the value zone. That's where I would get interested. Disney. All right, so I am going to buy Disney today. We have an under the 200, over the 200. We have an under 30. We have an over 30. We have an under the third ATR channel, over the third ATR channel. Yes, it did reject the 100-day above. I don't like that so much, but it does give me a good risk to reward. If it closes below the 200-day moving average, I will just go ahead and get out. You could also use it to close below the 30 RSI. Either one are valid approaches. But I usually go with the more conservative stop loss, which would be close below the 200. It's a 35.85 RSI. My initial profit target is going to be up here with a 50 RSI or a 50-day moving average. So this downside, fairly small, upside, nice, right? 2 or 3 times to the upside. So I am going to buy Disney at the end of the day. as long as it closes above the 200. Etsy, nothing really here on Etsy. I need to pull back into value. Facebook, almost a V1 in the value zone, but it breaks every rule I have, right? It didn't go sideways. Day one's bar's too high. So I can't get involved with Facebook here. Gold, we talked about that, down today on the rally. Google up, not so much though as everything else. So nothing here on Google. Goldman Sachs, V1 in the value zone, but it's not the proper setup. See this big move down just followed by a bounce. Usually these V bounces tend to fail. I would look for a higher low V1 entry somewhere down in here. How are we doing on time? Okay. Home Depot's doing pretty nice. Nothing there. Need to pull back into value. IBB under the 1 ATR channel. I need this to move back up into the value zone, have a couple day pullback, then have a higher low V1 or V2. Or if it continues to go down, look for a deep dip buy, maybe a rejection of the 100-day moving average, rejection of the 30 RSI to give me a good risk to reward ratio, but nothing there. Intel. We had the big earnings, had the big gap up. Next day we closed the gap of the low of the gap up day. It's not too positive. We are rallying today, but just too high for me to buy here. IWM, nothing here. I would need it to continue up, pull back for a couple days, V1, V2. If we could come back, have a higher low V1, V2, reject the 50-day moving average and the -1 ATR channel, that would be pretty sweet, but nothing there. Johnson & Johnson, Kamal and I talked about this last night. We have a high with high MACD bars. We go down, we go negative, we go higher, no MACD bars. We go down, make some red. Now we went higher today with no green. So to me, this looks quite bearish. I'm not going to take a position in this. If we would have had a higher low V2 to the downside after this double top with the bearish divergence, I might have considered it, but it's not doing that today, so I don't have to worry about it. CarMax, Steve had a great trade on CarMax back here. Fantastic. I think got out right around here, if I recall. Somewhere now, I can't remember, but nice big day up. I need to pull back to get interested. Coca-Cola has earnings coming up, been very strong, down today, not surprised. This is more of a consumer defensive, looking for a pullback into the value zone to get interested here. Lockheed Martin had earnings, very strong, one way to the upside, but it's too high for me, bad risk to reward, need to pull back into value. MasterCard, nice up move today after yesterday's huge down move, but I need to pull back into value. We have earnings coming up. McDonald's, Mickey D, looking for a pullback into value for me to get interested here. Merck, of course, I did buy that yesterday with the under 30, over 30, under the 100, over the 100, and the V1. Whenever you have a confluence of under 30, over 30, and under the 100, and over the 100, I consider that a very strong signal. So is it going to work out? It's working out so far. It's working out so far. Not huge, but so far. One profit target there. And again, my stop is going to be a close below halfway of the washout bar on this V2. Microsoft, V2, day 1, day 2, day 3, but it's triggering too high. There's no sideways movement. Day 1's bar was larger than a 1 ATR, and we have earnings. So that one is forbidden. Netflix, need to pull back into value. Nike, rallied a little bit, but not that much. Not that much. So looking for this to come into the value zone, pull back, give me a V1, V2. Philip Morris, look at this. Just goes to show you that buying over the 1 ATR channel, the green line, is generally not a good propositional bet. It's better to wait to buy back in the value zone. Well, this came in the value zone, but no sideways movement, and just went slicing through it like a hot knife through butter. Now we are below the -1 ATR channel. Now we're below the 50-day moving average. I would be looking for a move back up into the value zone with 1 or 2 days down and looking for a higher low V1. PayPal up nicely today. Got hammered yesterday, but up nicely today. It looks like we have earnings, so I would just need to wait for a pullback. Q's big strong day up today. We came back into the value zone, right? Better to buy in the value zone than up here, but people took advantage of this dip. But again, there's nothing really here I can buy. Silver, oh, look at this. We have the 5 EMA crossing under the 20 EMA. Silver's down 3.32% today. My goodness. So now, if in the coming days or weeks we have the 5 cross back over the 20, that's a legitimate back-tested approach. I mean, we took the last trade we took exactly the same. See how the 5 was under the 20, then crossed over it. I bought it here and had this beautiful 4-day run all the way up to there. So yeah, cross under today. So this will be a setup coming in the future if we can get the 5 to cross over the 20, or I should say when it crosses over. S&P, of course, we were fortunate enough to have that nice overnight gap here. We'll be buying that again today. Bonds, we talked about, we had this big gap up. Today we closed below yesterday's low of the gap up. That's somewhat bearish, but doesn't surprise me. We were up here near the 6 ATR channel. Whenever you get up into the 6 ATR channel, you are really, really pushing it, really, really in thin air, but in the short term. But in the long term, I hope that keeps going up for Andrea. Tesla's up a little today, just looking for a pullback into value. Twitter is up, V2, day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1, but again, no sideways movement. And in my experience, doesn't mean it's going to happen, but in my experience, when you have these downs and then immediately back up, they have a hard time continuing higher. This might just go roaring up. I don't know, but I'm just saying you look at this pattern 100 times, less than 50% of the time, this is going to continue up. And so that's how I kind of base everything. UNH, nothing, looking for a move into the value zone, pullback, higher low V1, V2. Oil up 1.44% today. Still not over the 30 RSI. You can see we got to the 6 ATR channel. That's generally the end of the line for a move, at least short term. VIX down big today. Glad I'm out of VIX. I bought VIX back here on the 21st and had almost over a 15% move to the upside. I scaled out, actually ran out of shares yesterday, so I got completely out of the trade yesterday, but this was a fantastic trade. It was under 30, over 30, under the 3rd ATR channel, over the 3rd ATR channel, and a V1, and it moved my way pretty quickly, but that was one of my better trades for the year. Just over 15%. I scaled out, so now it's down today, so that makes me feel good. Verizon, big day up today, just too high. It's a V2, but it's triggering too high. Walmart, considered buying Walmart yesterday with this sideways movement and then this V1, but I did decide to pass, although I wish I wouldn't have, but I did. But now we have a MACD crossover, which is great. So we were under the -1 ATR channel. What I'd really like to see, if this runs out of steam and then pulls back a little bit, because the people that bought here, they're looking to sell. They've had a great profit. They're looking to sell this if there's any weakness. If there's weakness, it might cause it to come back down, and then I'd look for that new group of buyers to come in and a higher low V1, V2 in the value zone. So that's my plan for Walmart. Energy up a little today, still under the 30 RSI. Financials, we were deep under the 50. Then we rallied up to it. See how we held support there 2 days ago? Now we lost it. Now that 50 that was support a couple days ago is now resistance above. So nothing there for me. Real estate, doing fine, doing great. Looking for a pullback into value. Utilities, up slightly today. This is a great trade that I had as well this year. I did buy this back on the 9th of January. We were above the 1 ATR channel. We came into the value zone. We moved sideways. I got a trigger right here, and this was a great, great, great trade. I don't even remember. I think I got out here, or I think here. So yeah, that was like over a 6% trade on utilities, which is a huge move on utilities, huge. So that was a great trade, but just goes to show you above the 1 ATR channel, waiting for it to come back into value, waiting for it to find some support and then have a trigger. And that was a great trade. And then healthcare closed below the -1 ATR channel, moving into the value zone. Same thing, People that bought down here, if it starts to get a little janky and squirrely, then they'll probably lock in profits, and that would cause it to come down. So a lot of potential higher low. I'm waiting for higher low V1s or V2s. So Amazon doing great, but I am going to pass on this because of the risk to reward here. Not a lot of volume here either. So like I said, this does backtest well. But I am going to go ahead and just pass. One, because Apple has earnings. I feel like Apple's going to, could dramatically affect Amazon, and just all in all, the risk to reward here doesn't look good. But that's just my opinion. Doesn't mean it's going to happen. It could go rocketing up. So I am going to pass on Amazon. Caterpillar, back over the 30, but still under the 100. So I'm going to pass there. And Walt Disney. I am going to buy Walt Disney at the end of the day. Chris F. Hey, how you doing? How about NVTA? Well, let's take a look. NVTA. Let's take a little look-see here. Yeah, so it's a V2. Here's day 1, here's day 2, here's day 3. Day 2 washes out day 1. Day 3 looks like it's going to close above day 1, but I can't take this trade. I can't buy over the 1 ATR channel. And the reason why is that it's hard to get over the 1 ATR channel, but when you do, you're starting to pull the rubber band tight. Anywhere from the value zone up to the 3rd ATR channel is your easiest move. But the closer you get over, as soon as you start getting above this 1 ATR channel, and even higher and higher and higher at the 3rd ATR channel, the rubber band is pulling. So when I buy a V1 or V2, I want it to be in the value zone, and my maximum that I'm going to take is about 3/4 from here to here. So right about here, if it triggered here, okay, I would take it because it has resistance one ATR channel above the 1 ATR channel. This is good. It's positive today that it's above the 1 ATR channel. That is good, but I mean, it's a dip. But it's really kind of a V at a little bit higher level that I would prefer. MACD's positive. We're above 50. This is all good. I'm not saying it's not going to go up, but if you're asking my opinion personally, I wouldn't take this because of where it is in the channel. If you do take it, I would suggest a stop below halfway of the washout bar here. It should, if it goes down, it should hold here. If it doesn't go here, it doesn't hold there, that's a bad sign. Evan says, curious on your thoughts on MAR as well. Well, honestly, yesterday was the day to buy this. When it went under the 30, over the 30, rejected the 100, rejected the 200, that would have been the day to buy it. Would I buy it here? I probably would not. It's just too big of a move down. Just my opinion. I don't think I would get involved here. Who knows? It might go roaring up. I don't want to steer you wrong, Chris, but just my opinion, I think it's made its move. I would, at the very least, if you really wanted to get into this, if you had a pullback for a couple days and then a higher low V1 is where I would look. Glenn says Disney has a gap below 136. Market might look to fill gap down to 133 and then bounce. Yeah, definitely could be. I mean, back here was before earnings. Back here was before the results of Disney Plus. So, down here, I would be interested also. I mean, a close under the 250 and over the 250 does backtest well for Disney, and it's closer to the support here. But I am going to take this one today because it gives me a good risk to reward ratio. It gets out, if I get out, I mean, if it closes below 200, I'm just out. That's just it. And it very well could do that, right? but that's how it goes. But I just have to pick my spots. But if it fails here, then a close under the 250 and back over, I would take another position there. John says silver had a 520 weekly cross recently. Did it? Yeah, it did. Basically about the same time that it had the 520 EMA cross on the daily. Looks like, because here's my previous trade. Big down week today, though. Hey, Bing He, good to see you. Hope you're having a good day, my friend. In Singapore, Bing He says, what do you think of KRO? Well, I mean, we have a double bottom. We do not have a bullish divergence. There's no V1. All you have is a under 30, over 30, which probably is not enough for me. If it closed above the third ATR channel, I'd feel better about it. But right now, it has rejected the negative third ATR channel. So me personally, I probably would not take this. Bing He says, got into GMed. 52.75. How are we doing on time? $52.75. Oh, you bought it today. Oh, nice. 52.75. Beautiful. Very nice. It had a nice V1 yesterday. Under 30, over 30, the V1. I think we talked about that one yesterday. So very nice, Bing He. All right, let's get you up on the board here, and then I've got to take a look at my positions. Good luck on that one, bud. I like how that continued to move. I like this sidewards movement, the false breakout to the downside, the under 30, over 30, all the stuff we talk about. All right, KRO. All right, I'm going to have to mark that one up in a second because I'm running out of time. Let me put this here so I know whose it is. Okay. Now, I've got to get to work. Okay, we have 2 minutes. I'm going to go ahead and just buy Disney right here. Okay. There's one Disney down. And now... two Disney's down. All right, and I got into Disney at 138.38. Okay, get Disney on the board over here. Okay. And that looks like it's it, other than my SPY trade, which will execute automatically. What's Apple doing? Woo! Disney. 138.38. Hopefully it doesn't close below the 200. That has happened to me before. I get in and then a couple minutes later it's under where I need it to be. But looks pretty good so far. Merck's fine. Hanging in there. SPY. Okay, there we go. And then SPY we bought at 326.89, or I bought, I should say. Nice to have a day up on this today, the overnight SPY trade, because yesterday, like I said, that was the biggest loss I think I've ever taken, almost using this a year. All right, so 326.89. 326.89. Boom. All right, so that's it. Are we too correlated? No, I don't think so. I mean, we've got Disney, which is kind of like its own entertainment company, a little bit of tech, a little bit of parks. So that's fine. Merck, of course, is pharmaceuticals. That's fine. And then S&P. So nothing too crazy, nothing too leveraged here, but that's kind of how I like it, right? All right. So listen, I'm going to get the rest of your comments. We're going to take a look at Apple, see what's going on, see who wins the prize. But before I do, I just quickly want to put in my daily plug. Hope it's okay with everybody, but I do want to let everyone know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. It's a live course. It's just you and I. 5 sessions. Each session is somewhere between 2 and 3 hours. I teach you everything I've learned over the last 24 years of trading, everything I've developed myself, everything that I've learned from my mentors like Steve Burns, Dr. Alexander Elder, Kerry Lavorne, Larry Williams. So, by the time you're done with this course, I really think you're going to have a good grasp on market psychology, technicals, resistance, position sizing, all this stuff. I've had really good success with my clients, and I think they've been very happy with the lessons. I hope, but that's what they tell me. So if you're interested in taking the course, it is $1,000. Sounds like a lot of money, but I think for what you learn and what I'm going to teach you and the intensity of the course, I think it's well worth it. So if you're interested in taking the course with me, please let me know. I do like to have a free Skype call with a prospective client. There's and prospective student, there's no obligation whatsoever, but I just want to know a little bit more about you. I want to know more about your trading, your challenges, your goals. You can ask me questions as well, but I just want to make sure we're a good fit. So, if you're interested in having a Skype call with me and taking this course with me, the one-on-one course, just send me an email. Email's in the description of this video, or you can reach out to me on Twitter. So that's that. Thanks for holding through with that. Oh, and my next request is, if you like today's podcast, if you find this channel helpful, please do me a favor and hit the thumbs up button before you leave. It helps to build the channel. A lot of people out there need help. So that would be nice if you could hit the thumbs up button on the way up. Okay, that's it. Done and done. And let's get back to the comments. All right, so Bing He bought KRO at... Oh, look at that. I nailed the price. It wasn't even trying. 1441. All right, now let's see why Bing He bought this. Okay, so under 30, over 30. I'm pretty sure that's why he bought it. I don't like that it rejected the third ATR channel, but, it does give a good risk to reward. 3122. So, close under 30. If I was trading that, I would get out, but it does give a good risk to reward. So good luck on that. And, that's exactly where you bought it. So that's good. Bing He says, Greg, for KRO, why is 10 January and 20 January not considered MACD? Because, and Kamal, if he was on here, because we talked about this last night, you see how we have deep red bars here, Bing He? Then we have a rally. Now we come back down. 2 things wrong with this. One, you need to go red to green, back to red. Dr. Alexander calls this, on the bullish side, calls this the breaking the back of the bear. But we have no green. It needs to go red, green, red. This is just a continuation of this red. Unless it goes green, it doesn't qualify. The other issue, you see how deep these bars are? The best double bottom and bullish divergences, these bars would be less than half the distance of this. It's less than this, but it's not substantially less. It's not less than half. If there was no red bars, if it went red, green, green, it would be even better. But this is showing that this move here had quite strong move down. So it needs to go red, green, red, and it needs the second reds have to be half of what the first reds are. This is just red, 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 and pretty deep bars. That make sense, Bing He? Bob Machard, hi, how are you? Thanks for coming, Bob. Bob says, hi, Greg, dividend question for you. What's up with NLOK, $12 per share dividend? Is it too good to be true? I bought shares just in case. Ooh, let's take a look. NLOK. I'm looking for dividend of 13 cents. If I look over here, let's see if I can bring this over. Did I put in the right symbol? NLOK. NLOK. Well, the dividend yield's only $1.29%, Bob. I don't see the $12 per share dividend here. I mean, the last dividend was 13 cents. The last dividend before that was 7 cents. So I don't see here anything about a $12 per share dividend, Bob. Sorry, maybe you want to just kind of reconfirm, check and reconfirm. Because yes, of course, that would be huge. It'd be like a 50% dividend. But then most likely the share price would decrease by that $12 as well. See what I'm saying? Kamal says, my 200 on Disney is at 138.47. Stock charts and Greg charts 137.45. Okay, Kamal. The reason why is in TradingView, you have your charts set to not adjusted for dividends. So it's keeping the dividends in there, where my charts are set to adjusted for dividends. I do know that TradingView has the option to adjust for dividends, but that's the difference, Kamal, in the readings on your 200-day and my 200-day. So maybe give them a call and just say, hey, how do I adjust my charts for dividends? That's the difference. So yours is 138.47. Here, I'll show you. Okay, mine's 138.53 actually, or close enough, right? So if I go into my chart here and go under price, if I click this, it's gonna unadjust. And I'll bet you, what's yours? 138.47. I'll bet you if I change it, see how it changed to 138.47? So that's why, Kamal, you need to adjust for dividends. So I'll go back in here, adjust for dividends here, and then it changes it to 137.53. Does that make sense, Kamal? Tiffany Saunders, nice to see you, my friend. I'm going to tell this story again because really it's pretty awesome. So I knew Tiffany from the gym like 25 years ago. I used to wear these clogs that my mom got from Switzerland. I wore these clogs to the gym, and Tiffany, it has a Dutch heritage, so she was obsessed with the clogs. And I always thought it was funny because she'd always come over and talk to me and talk about my clogs. So this is 25 years ago. Just the other day, I'm walking along, into my head, I think, I wonder whatever happened to Tiffany. She really liked my clogs. Just a fleeting thought, just wondered about her, how she was doing. The next day, out of the blue, 25 years later, she messaged me on Facebook and says, hi, do you remember me? I used to like your clogs. Is that serendipity or what? I'm still blown away by it. And then we had a nice chat yesterday. We caught up after 25 years. So, okay. So same question, Tiff, on your 200-day moving average. Your charts are not adjusted for dividends. Listen, not every trading platform, not every charting platform lets you adjust for dividends. If you can't, don't worry about it. It doesn't mean mine are better than yours. Just take your trades based upon what you have. But if you have the ability to adjust for dividends, I would suggest it. But if not, don't sweat it. It's just trade the charts you have. Sometimes I'll get into a trade that you won't get into a trade because our numbers are a little different. Then I'll lose money on the trade and you didn't get in the trade. So you're happy. Other times I'll get in, you won't get in, it will go up. I'll be happy, you won't be happy, right? But as long as you're consistent. Bing He says, oh yeah, you mentioned before the height difference of the bar needs to be significant to divergence. Don't know why I forgot. That's okay. And not only the height difference, Bing He, but also there was no green here. It was all red. Red, 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 red. If it goes red, green, red, that's what you need. But if it's just all red, yes, we had a little bounce here, but just consider this one big move down. Bob says it's on January 31st. You see here, Bob, I have earnings here on January 30th, but I don't have a little symbol showing me that you're going to have a dividend. But keep in mind, Bob, if you have a $100 stock and you get a $5 dividend, it's not a free dividend, right? Because when you get the dividend, yes, you're going to get the $5 stock, but the stock price is most likely going to go from 100 to 95. Do you see what I'm saying? So if you get a $12 dividend on that kind of price, most likely the stock is going to be reduced by $12 because basically they're changing the valuation of the company because they're taking $12 per share out, and it reduces the stock price by the same amount. So just buying dividends is, it's not a holy grail of like, oh look, they got a dividend tomorrow, I'll just pick up $1,000. No, yeah, you will pick up the $1,000, but most likely the value of the stock will go down by $1,000 as well. Tiffany says, thank you. You're fantastic. You are welcome. Bob says, Norton LifeLock declares a special one-time cash dividend of $12 per share of North LifeLock common shares, returning over $8 billion of cap to holders. Wow. That's pretty incredible. But like I said, Bob, I'm fairly sure that the stock price, NKOL. Why am I not? Sorry. NLOK. I'm dyslexic. NLOK. Oh man. NLOK. Yeah, I mean, if they're giving a $12 dividend share, this is going to be reducing. I mean, think about it. You're not going to just go get a free $12. You know what I'm saying, Bob? I wish it were true, but does that make sense, Bob? Kamal says, found the adjust for dividend, and now the close is above the 200. Okay, good. Joshua says, Bob, I do show $12 on Thinkorswim, but Greg is right. Yeah, it's going to reduce. It's going to reduce. Bob says, got it. Thanks. Thanks for coming by, Bob. I think this is the first time I've seen you. Appreciate you coming by. And I hope that was helpful. And if you have any questions, let me know. Glenn says, SBUX may have a long-term risk from LK, waiting for LK to find support. Wow. Just goes to show you, everybody, buying up in these ranges, it's over 70 RSI, buying up in these ranges, much better to wait for a pullback. This happens all the time. Everything looks good here. The news is good. CNBC is talking about how everything's going to the moon. And sometimes it does go good, but you're always better to wait to pull for a pullback. I've mentioned this many times, but when I studied with Dr. Alexander Elder, he says, Greg, traders and investors are the only people that like to buy things at full price. They don't want to buy on sale. You want to buy things on sale. You don't want to buy them at when they're full retail, right? Up here, anything above the 1 ATR channel, I consider retail. In the value zone, I consider fairly priced. Under the -1 ATR channel, I consider undervalued. So I want to buy something undervalued or at value. I want to sell things when they're overvalued. Dr. Alexander Elder told me a story about Egypt. They hired an accounting firm, some consultants about their cotton price. This is the country. And they did this big study on why do cotton prices go up and why do they go down and how can we exploit these prices. And after 6 months of this big long study, I think it was like a German consulting firm, something like this, they came back and they said, cotton prices go over value, they go into value, and they go under value. You should sell when they are overvalued. You should buy when they're at fairly valued or undervalued, and then sell back when they go overvalued. So, why did I even mention that? Oh, because we were up here and better now that we are down here. So if it could come down here, find a base, like Glenn said, finding some support, but I don't really see support yet. Nothing shows me support yet. If it could move sideways, we had a nice V1 or V2, that'd be great. We were under the -1 ATR channel. If we could rally into the value zone, then back down for a couple days, then a higher low V1. Higher low entries are, in my opinion, are always better than lower lows. Lower lows, people are buying just to hold for 2 or 3 or 4 days until it peters out and starts slowing down. Then they will get out. That causes the move to go down. If you can get a new group of buyers to come in, gives you that higher low. Higher low buyers are in it more for the long term. Lower low buyers are in it just for a quick bounce. Andrew says CNBC should be used purely for entertainment purposes only. Oh man, I totally agree, Andrea. Could not agree more. Could not agree more. All right, any news on Apple? Whoa, I just saw some news about an earthquake? I think. Starbucks had earnings. They outpaced estimates, but warns coronavirus could hit 2020. I would imagine. All right, so we're all waiting for Apple. Anyone else want to put in their 2 cents on Apple as far as their guess? Glenn said Starbucks first to use coronavirus excuse and report. Yeah, that's a good point, Glenn. That is a good point. All right, let me go back and see what our analysts say. Gamer said Apple is going to beat and stock go up. That's analyst number 1. Analyst number 2 is Glenn. Earnings up, stock down. Kamal says beat and flat. Evan says up and up. Steve says earnings are already priced in and it will result in profit taking regardless of results. You know, I'll tell you, this doesn't happen all the time, but generally if you have a huge run up into earnings, I don't mean just kind of a sideways movement, but a run up into earnings and then you have good earnings. Yes, a lot of time it is baked in the cake and that's it, but who knows? I mean, I could have said the same thing about Intel, right? Intel had a nice run up into earnings, but they beat and it's held there. So that's what our analysts, our panel of analysts say. Evan says, how soon will we know about Apple? Probably in the next 5 minutes, Evan. Bob says, I've got them all in one basket. Murat says, I'm positive on Apple. Regardless of earnings, it is up. All right. He says, Greg, if you cut loss with the closing price below your stop loss, the closing price may be far below your stop loss, but still above your 5% hard stop. The initial RR is not accurate then. Well, the thing is, is that I usually hit that emergency stop, the 5% stop loss. You know, I think I hit it 4 times last year or 5 times last year out of thousands of trades. So, you know, you have to factor in the percentage of the time that's going to happen too, right? 99% of the time, I use my end of day stop. I don't use my 5% emergency stop. So, you know, it might skew it a little bit, but like I said, it happens so infrequently. But I guess technically you're right, but practically I don't think so. Wow, the Dow really sold off, didn't it? Down, it was 187. I was so busy speaking, I didn't notice it. So if we look here, let's look at the last 5 minutes. Yeah, it sold off quite a bit. Look, everybody, you know, I always talk about the end of the day, all the volume coming in. Look at the last 5 minutes on the Dow, right? During the normal part of the day, you just don't have a lot of action. But look at the last 5 minutes, and particularly, let's look at the last minute. Look at that. The large financial institutions, the people with size, came into the close of the market and drove it down with huge volume. So that's, you know, just an example of why I wait till the end there to buy. One more time with Frank's poem. Be careful when the market's on fire. Man, it's hard to stay cool as voices shout fool. But great traders are strong and mighty as the oak, for they know not to trade when they smell smoke. So good. Appreciate you doing that every day, Frank. All right. What is Starbucks doing after hours? Oh, it's down. Let's take a look at that. What today's chart was. Oh yeah, it got hit pretty good, and it didn't really rally today along with the market, did it? Mert says, my fastest stop loss hitting was 1 second. I placed the order and Trump tweeted at the same time. Oh, no. Yeah, you don't want to get in front of a President Trump tweet ever. Being he says, I need at least 2 correct trades to offset 1 wrong trade because the actual cut loss always below my stop loss price. I see. I think as well, being it kind of is a function of the type of stocks you trade that have really big moves, big percentage moves. Like maybe its average range of the day is 2 or 3%. So in that case, yeah, you are right. But with the type of stocks I trade, with the movements of 5% move, like, if I traded Beyond Meat, I may have to adjust things because its normal range is so high. But on most of the stocks that I trade, the average range is less than 1%. Boy, I want to congratulate Jesse again. Look at this, everybody. Pull back into value, V1, rejection of the 100, rejection of the 20, and right about the maximum where I would buy it, right? About 3/4. And look at this, up 8.74% today. So proud of Jesse. And so from his entry, he's almost up 14, almost 15%. So glad to hear that, Jesse. And like I said, he's a former student of mine, works really, really hard, and just so happy to see that. No Apple yet, huh? The anticipation. I should have bought or sold 1 share for fun. Honestly, I don't know which way I would have gone with it. Because I can't tell the future. Let's see. Mert says, I was confused because I placed the order and usually there comes 2 notifications, execution of order and placing stop loss, the time I pressed enter and the same time. Mert, I'm going to have to tell you one day about the most incredibly horrific, terrifying trade that I made because of a mistake on the Japanese yen. I mean, I will never forget this trade. Unbelievable. Zach says, I think my biggest concern so far is being able to decipher where I should sell once the stock price moves up. Yeah, it's true, Zach. I mean, it really is true. That's why I like to play offense and defense. As it moves up, I like to scale out because I don't know exactly where the top's going to be, right? I like to scale out once it gets a certain price above my move. I like to trail it. But, I mean, your initial stop, you should have a pretty good idea of what your initial stop is. But as it moves up, that's why I like to phase out because I don't ever know quite where it's going to be. So if you need some help with that, Zach, let me know. Oh, Kamal says, and getting a beating. What's he talking about? Bing He says, thanks. You enlightened me to check ATR before taking trades. Yes. Yeah. I mean, if the average range is 3%, then it's a whole different story. Being he, what you might do is look what the ATR reading is, and if the ATR reading is 1, give yourself 2 ATR stop, divide that into, your maximum risk, and that will show you the amount of shares to buy in order to adjust for the volatility. Zach says phasing out, as you call it. Yes. Oh, AMD's getting beat up. AMD's down $1.50. It's down about 3%. Oh, hey, Apple's up $5, everybody. So assume that they beat. Let's take a look. So Apple's up 1.5%. AMD falls after soft revenue projections. Whew, now Apple's up $2.50, so it's up $7, everybody. All right. Well, listen, I'm going to have to get out of here, go for my hike. I appreciate everybody coming today. It's really nice to have you here. I hope it's helping. Look forward to seeing everyone. And 2 things before I go. Please go out, do something nice for somebody today, just a smile or a hello, just some nice gesture. It really might turn it around for people, turn their day around. So it's a good policy, and maybe somebody will do it one day to you if you're having a bad day. It'll make your day better. So that's one. Please go out, do something nice. Number 2, please, if you like today's podcast and found it helpful, please hit the thumbs up button on the way out. So anyway, thanks everybody. Good seeing you. And have a good rest of your day, and hopefully I will see you tomorrow during the last hour of the market. And Apple is up. Let's take a look, see. Almost $10. Huge move, huge move. Apple beat estimates by 10%. All right. Thanks for that, Bob. Good seeing you. All right, everybody. Take care now. Have a good rest of your day. Hope to see you tomorrow. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.